Welcome to the Trading with Venus podcast, where we help you establish strong trading habits, generate consistent profits, and create the lifestyle you desire for yourself and your family. Now your host, Raman Gill.
Welcome to another episode of the Trading with Venus podcast. This is your host, Raman Gill. Today, I would like to talk about how to measure trading success. From time to time, I get comments on the YouTube channel as well as on the podcast and other places that I am posting stuff in regards to trading. And one of the people who left a comment talked about how people measure their success in pips. And today I wanted to address that. From the comments, it sounded like he was not comfortable with people measuring their success in pips. However, we do need a scorecard, and in Forex, pips is the scorecard that we have. So if you were in equity markets, you would do points. If you're in trading in Forex, you would look at pips. Now, there are several different ways we can measure success. The easiest way would be your P&L, profit and loss. Now, that's a good measure of success because that's real money that you're making or losing. However, when we are doing stuff that caters to a lot of people, we can't really calculate the P&L based on the on how much money has been made, because one person may have a large account. So even though their number of pips are small, they could have a large amount of cash. However, if somebody has a small account and they could make 100 pips, for example, in a day, but they only made $10 because they're trading a really, really small size. So it's really hard to measure success just on profit and loss alone. However, profit and loss, P&L, is a very important part of measuring success. So it is important to keep track of P&L. So that's why when I do my YouTube videos, the 10,000 Trades show, I refer to pips as a number of pips made in profit, and then I also refer to the dollar amount. And again, I use both of those things because some people may not have the same account size. So if somebody's trading a standard lot, and standard lot is just easier to go by, so I use a standard lot. So if somebody is using a standard lot, what kind of profit can they make? So that's just a reference point that I use. Another reference point is pips. So if you're not using a standard lot, how many pips can you make? And both of those are valid ways to measure success. Another thing we can look at is risk to reward ratio. Now, risk to reward ratio is another way you can look at things, and it's just another measure. So there are several different measures you can look at it, but you can't always use the risk to reward as a way to measure the success, because some trades will have great risk to reward ratio, whereas others may just be 1-to-1, and I do not recommend taking a trade that has a negative risk to reward ratio, just because if you keep hitting the stops, you could stand to lose a lot of money. So let's take a look at an analogy. I love talking about analogies. So for example, if you're a basketball player and you're playing in a tournament, you're playing a game, the easiest way to keep track of what the score is, or who wins and who loses, is by keeping track of the score. How many points did you score? Whether you had a 3-pointer, 2-pointer, a single pointer, like how many points did you score at the end of the game? Now, that is one way to measure success. However, the team that lost the game, you can still have good players on that team that did things really well. For example, number of assists that you had, right? How many blocks did you have? Things like that. Those are also important things that we need to track and keep in mind. However, when it comes to the bottom line, that will be the number of points that were scored, and then we would keep track of win-loss ratio. So we'll take a look at how many games were won, how many were lost, so that we can have an overall picture. However, even within that, like I said, there are different things you could track. So same way in trading, So number of pips is a good measure of how to keep track of the movement, right? How much progress we have made in something in our trading. And other way is to look at P&L, profit and loss. And then there are other things you want to track: win-loss ratio. You want to look at risk to reward ratio, return on investment, how much money did you put in and how much return are you getting, that type of stuff. So there are different factors we need to consider, different measures we need to account for. But at the end of the day, if we were to pick one thing to really look at success versus loss, that would be the number of pips gained or lost. That is the easiest thing to keep track of. Other things are also important and also important to keep track of, but if I were to pick one, I would go with the number of pips earned or lost. So there you have it. That's my take on how to measure your trading success. If you are in this journey and you are still trying to get your number of pips in, keep at it. Now, with the number of pips you have, then we'll get into scalability. How do you keep the small amount of pips but increase your P&L? That's another topic. We'll touch on that in another podcast. So for today, that's it. Thank you so much for joining me today. I hope you have a wonderful trading week, and I'll see you next time.
Thanks for joining us today. With much gratitude, your show host, Raman Gill.